Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for the week ending March 11th, 2020. Let's get into stocks. The indices were down in the U.S. last week with the S&P declining 2.84%. The Russell 2000 dropped 1.03% and the NASDAQ was down 3.51%. Now the overseas developed markets, which was the EFA, increased 0.57% while the MSCI dropped 5.07%. Within the U.S., the best performing sectors were energy and utilities, no surprise looking at the gas pumps, and the consumer staples and technology were the biggest laggards. Now, by style, value outperformed growth and small caps outperformed large caps. In fixed income, interest rates rose and bond values fell, with the yields on the 2-year, 10-year, and 30-year treasuries rising by 25, 26, and 20 basis points, respectively. Now that resulted in a 2% rate for the 10-year, which is down from 2.64 at this time in 2019. So commodities, the price of West Texas crude fell 5.49% last week to $109.33 per barrel. One of the largest suppliers in OPEC, the UAE, said that it favors production increases and will be encouraging OPEC to consider higher production levels. This comes as the Ukraine president said he's prepared for certain compromises with Russia, which could result in more Russian oil available to the West. We'll see how that works out. So economic data, inflation, the consumer price index rose 7.9% on a year-over-year basis. The core CPI, which excludes volatile food and energy, rose 6.4% year-over-year. We've been talking about inflation. They said, oh, it's only going to be around for a little bit. Not so, not so. It's going to be here for a little while. Fuel and used cars and trucks led the increases with 43% and 41% price hikes over this time last year, which is utterly ridiculous, but that's what's happening. The Consumer Sentiment Index fell to 59.7 in the early weeks of March, its lowest level since 2011 and nearly a 3-point decline from the February's final reading. Now, this survey is heavily influenced by recent trends in the stock market, together with high fuel prices and rising interest rates. So let's talk about some company news. GI Holdings, Iberdrola SA, which is a utility based in Spain, and Allianz SE and Munich RE, which are insurance companies based in Germany, rose 8.88%, 6.94%, and 6.93% respectively last week. Gains can be attributed to a general elevation of fear or alleviation of fear around the West Europe as the prospects have improved for troops in Ukraine. So they're hoping that things are getting better. Travel and leisure, which is a core select and contrarian holding, rose 4.43% last week, following the board's announcement of another increase to their dividend, bringing the total increase to 33% over a year-over-year basis. Now, the increase is attributed to the strength management TNL is seeing in their travel business. That's it for the week. Thank you so much for being part of our ARA family. We want to wish everyone a happy St. Patrick's Day. Remember, if you need to contact us, call us at 855-756-5700. Go to our website at aradvisorsinc.com. Visit our Facebook and YouTube pages and scan the QR code at the end of this video to subscribe to our newsletter. And remember, stay the course. I know you were properly allocated. Not everybody, but we're starting to say, oh my goodness, the market's up and down, up and down, up and down. If you can't sleep at night, if you can't stomach it, we need to look at how you're allocated, because we always want to make sure we allocate you the right way, because we're going to have volatility in the market. We can't always go up. I know a lot of you understand that. But if you do have any questions on how you're allocated and if everything's the right way and making sure, because we're going to keep going. We got a long time, God willing, and we want to make sure you're invested the right way. So God bless you. Thanks for watching. We'll see you again next week.